So okay, it's good if you guys can hear me, and let no one touch my screen. Let no one touch my screen. So yeah, I welcome all of you guys in this wonderful meeting. We are here to analyze the markets based on technical analysis or price action, and also including some of tools that you guys would like us to use. So as usual, guys, which pair should we start with? Just recommend pairs that we should analyze. I can't hear anything. If you can't hear, it means that the problem is with your system. So guys, just recommend pairs, just recommend what we will analyze. Okay, New Zealand USD. Other pair, just recommend pairs, guys, so that we can not waste the little time that we have. GBP USD. Okay, that's wonderful. USD JPY. Okay, that's good. Any other pair? Okay, so let's start with the GBP USD. Okay, I see USD CHF, GBP USD. There we are, guys. On GBP USD, we are opening our higher time frame, which is the 4-hour, and we can see clearly that the market belongs to these guys who are pushing it down, meaning the sellers. So meaning in this kind of a market, the big boy, it is the guy who is selling, and we can see that the selling process, it started all the way up in this level here, and we can see that this guy, it is the same guy as this one. It is his level. So it is okay, I can see Nasdaq. So it is a seller's market. So if it is a seller's market, there is something that is interesting, which is one thing that we are looking forward to do. We are looking forward for a selling opportunity, and if we are looking for a selling opportunity, the question is, where should we sell? You all know, guys, that we sell when the market is high, and now we can see that the market is currently in a very high level compared to its low. So now what I can put in the market first, okay, let me just go to my 1 hour so that we can explain in details what is happening here. So here, if you are looking it in the lower time frame, you can have questions because the trend is not clearly visible. But I want to show you guys something that you can see, that we've been having lows and highs, and then boom, a new higher high. And in the new higher high, we know that it is now, the price has now broken the pattern which was moving with here. If I can draw my trend line here, I can connect this high, the second one and the third one. You can see that there is a channel break here. There is a channel break, meaning the pattern was broken here, meaning the market here, remember, okay, I was not with you guys, I was with the guys on the LI community. Okay, remember here, what we see here, it is a strong trend. So basically, when a trend is being broken, or when a pattern is being broken, you have to consider that price can break the trend to change the trend strength, not direction. So it can break a strong trend to move in a weak trend, not necessarily meaning it will go to the opposite direction, but it can mean that it is from a strong trend to a weak trend. So here we can see that this strong trend was broken and price went up, but it doesn't destroy the fact that price is still in a downtrend, as we have seen in the higher time frame that it is still clearly a downtrend if you are to look clearly or carefully. So then if it is still a downtrend but it is now a weak downtrend, you need to know that a weak downtrend, it is a trend that is very healthy compared to a strong trend, because a strong trend doesn't last for a long period of time. The guys who are in the VIP community, they will understand this because we spoke about this week. So now the question is, the market is opening in 3 hours. Should I press the sell button? So okay, there are many things that we have to consider. So remember, we are selling when the price is high. So we can see that, okay, in this small pattern, we can see that, okay, price has begun to form a sort of a trend, and we can see that price is bouncing in a very important level, which is support becoming resistance, which is another key element of price action entries, which is a key element of price action entries. So if we are to go to our last time frame, which is the lowest time frame, you can see that here, if you are to look in details, you can even come out with patterns like head and shoulders, because we have this high, which is higher than the previous one and even higher than the following ones, meaning this is a sort of a head and shoulder pattern which resemble a downward move, and it is a good opportunity to enter. Why? Because if you are to draw, let no one use a microphone. If you are to draw a small trend line in this small lows here, you can see that your trend line is a bit broken, meaning if a trend line is broken, it means that we are taking it is a good time to enter the market. So what I can say is that, okay, when the market opens, guys, it is a good trade to take as a selling trade. It is a good trade to take as a selling trade, and your stop loss, it is advisable that your stop loss is just above this previous high here, and your target, you can put your target based on your higher time frame, maybe the 4 hour. For an example, your target should be closer to this low here, maybe above, just a bit above. Or if you are willing to take more returns, you can put your targets based on Fibonacci extension. But for now, let us keep our targets here for safety. So this is a good trade when the market opens. Let us go to the next currency pair, which is USD Japanese yen. I hope, guys, it is making sense. USD Japanese yen. First things first, we are looking into the 4 hour. We can see that in the 4 hour, it is this guy's market, meaning it is buyer's market, because we are seeing higher highs and higher lows. So then if we are to look clearly, remember our principle, guys. Our principle is that we are not interested in the impulsive wave. We are interested in the corrective wave, because in the corrective wave, that's where we take our entries. We want the impulsive wave to play while we are inside the market. So here we can see that we have a low, we have a high, we have a low, we have another high, and now the market is currently in a corrective manner. It is currently in a corrective manner, a manner whereby we are interested. But I want you guys to pay careful attention. I want you to pay careful attention that, okay, if we are to look at this, what is happening now is that the price is on a very, very significant level where it reacted significantly in the past. So which is a warning to us that in this kind of a level, we are not looking forward to oppose the move, meaning we can see that there was this guy who took the price up, down, and when he was supposed to take the price down here, he faced a lot of struggles, but he was able to push the price down, but not that far. We can see a reversal pattern here, which is a head and shoulders. So now this reversal pattern, it can resemble a long-term uptrend, but then when is it safe for us to take this trend? Okay, we have to take this buy after the price goes out of this zone. Or what we can do, we can take it in this zone, but we have to scale our risk, meaning we have to take down our risk. For an example, let me just remove this thing. What is it? Okay, for an example, you can see that this corrective wave, it is moving in a form of a pattern where we have lows and we have highs. And remember, our entry principle, it is pattern break, and we can see that this pattern, it is like a falling wedge. And in a falling wedge, you know guys, that we are expecting an upward move. For an example, price will move, and then it will collapse all the way up. So now the good thing, it is not to take the price here around this zone here, but it is good to take the price somewhere above here, you see. And remember that this is the significant zone that we saw from the previous resistance. So if you are taking the buy somewhere around here, you need to know that you need to take down your risk. If you were using lot which is 2.0, you have to maybe use 1.0 because it is a high risk trade. But for now, there is nothing that you can do when the market opens. So let us go to the next one, which is USD-CHF. Okay, USD-CHF, it sometimes behave the same as USD JPY. So let us check. Okay, we can see a difference. So what we can say in this market here, it is also in a very significant level here. We can see that it is very close, and it has been reacting all the way in this level here, and it also formed another level down here. So meaning the market is moving in a sideways manner, meaning in a range. So if it is moving in a range, you need to know that in a range we can do both things, but it is very risky to trade such a ranging market, because it is not a healthy range. It is not a healthy range. Why? Because you can see that the market, before it takes off, it keeps on playing. For an example, here it played before it took off, and here it is also playing before it took off. So here we don't know what is going to happen. Maybe the play is going to go up and stop us out. So it is also not a safe market. It's not a safe market to enter as a sell. But once you see something like a pattern which resemble a beginning of a downward move, it can be a good market to sell. For an example, we can see that currently the strength is now getting weaker, because we can see the buyers from here, they moved in very great momentum, and now they are beginning to be weaker, as we can see visible highs and visible lows. So you can take this. For an example, here we can see that we are no longer having new higher highs, meaning it is now blocked in this level. So what we are waiting for, we are waiting for a lower low. For an example, something like this, and then boom, all the way down. Then this retest, it is where we are taking it. Or if we are not taking it in this retest, we are taking it in the breakout of these rising pattern here, in the breakout, when the breakout is obvious, not now. So I hope it is making sense. So we have something like this currently. We have like a rising wedge, whereby there are no new higher highs, but there are only higher lows, meaning the buyers are putting pressure, but the sellers, they are defensive, so they might be coming in. So also watch out for this wonderful trade as a selling trade. Let us go to the next one. Okay, USD NOK. I never traded such a pair. USD. Let us check it. Let us go to our higher time frame. And what we can see on our higher time frame, it is a seller's market. It is seller's market. The market is obviously moving in a downtrend, and if the market is moving in a downtrend, what you need to know is that we are looking for a selling opportunity, and we take a selling opportunity in the corrective wave. So the question is, was this upward move a corrective wave? Yes, it was a corrective wave. And the question again is this small move a beginning of an impulsive wave? Then that's where we need to apply the mindset of wisdom. Remember, there is something that I told you guys, that before you enter a market, you should look at the behavior of the market. Don't just enter the market because it is displaying a pattern that you know from a textbook, from baby peeps, from the candlestick Bible, or what. For an example, remember we spoke about long time ago. We spoke about transition, whereby the market has to enter in a transition mode, and I highlighted that it is not every market that move in this manner. For an example, if you can see the beginning of this impulsive move, there was non-transition. The beginning of this impulsive move, there was non-transition. It was only here, and then now here is the beginning of a downward move. Should you wait for a transition? The answer is, if we wait for a transition, we might miss the downward move, because this market is not moving in a transition mode when it comes to handing over from buyers to sellers. So what I can say is that even in this kind of a market, when the market opens, it is also a good trade to enter a sell position, but you have to put your stop loss above to give the price permission, because you can see that price is reacting in a support which became resistance, which is also a good entry point when it comes to price action. In transition, one delay, it is simply the handing over from buyers to sellers. For an example, when price was moving up, usually before price can go down, it usually enter in a form of a consolidation like this, and then boom, the downward wave begin, meaning these guys, they are handing over to these guys through this phase here, which is a transition phase. Let us go to Nasdaq. Oh, thank you, Lord. Nasdaq. You know, guys, I have weaknesses in opening Nasdaq chart, so I believe I'm opening it. Oh, Jesus Christ. The network. Okay, the network was gone, but I believe we are now I believe now we are back. It was the network issues. So I believe we are now back. Okay, I will speak about the transition. Okay, let me just give you in just 1 second. Okay, then transition, I said let's make an example of an upward move, or okay, let us make an example of this market phase here. You can see that it was buyers market, but then it eventually became sellers market, but it didn't just collapse and become sellers market. There was this phase here whereby the market had no direction. That's what we call in transition, whereby the buyers, they are giving the market to the sellers. So that's basically in transition, the handing over. So here we have Nasdaq. Let us check. I don't know if it's the real Nasdaq. So here we have Nasdaq, and it is buyers market. We can see that the momentum is all the way on the upper side, and we are looking for a buying opportunity. So you know what to consider. We only enter a buy in a corrective wave. So let us just analyze it clearly. There we are. So we can see that now the market has started moving. all the way up, then the question is, should we take this as a buy or should we still wait? Remember what we consider, we always watch for the pattern. We always watch for the pattern formed in the corrective wave. For an example, this pattern, and we can see that this pattern was broken, and not just being broken, but after being broken, it was also retested, which is a very good confirmation. This thing which happened here, which confirmed that the market can be going all the way up, because if you even have to look carefully, you can see that we have something like a pattern whereby we have this shoulder, we have this head, and then we have this other shoulder, which confirms an upward move. So yeah, what I can say is that, okay, you can buy this market when the market opens, but then the question is, because already the price is far, where are you going to put your stop loss? Okay, you can put a stop loss here if your account is small. If your account is just reasonable, you can put a stop loss here below this, just to give the market a breathing space, and also to have an opportunity to watch when the market changes direction. Maybe let's say it will continue on this push all the way down, like from there. My drawing tool is freezing. From there all the way down, let's say it will continue and collapse all the way down, you will have an opportunity to watch the price formation or the structures which are going to be formed here. So it is good to give your market an opportunity to breathe. So it is a good opportunity to buy when the market open, and put your stop here or somewhere where you would like to put it. Same as consolidation, yes, but consolidation, it is something which is long term. So any question, guys, any questions? I just wanted to make this short and brief. If you have any question, you can just post it before we run out of time. Question. Okay, seems like we don't have a question. So yeah, I think if I will have time tomorrow, I will try to post some of these signals that we spoke about today when they've played out, and when the time is right to enter them, and also other signals. So I will try, if I will have time in the morning, just to analyze all the pairs that I have. You use only pure price action, no indicators for forex market. Okay, indicators, the moving averages you're using VIX is 21 and 51. Yes, okay, indicators, I do use indicators, but it's just that maybe, okay, if you are new here, you'll maybe have some problem. I do use indicators, like the indicators which are on my screen, volume, and also the relative strength index. They are not here just decorating. I use them when I analyze the market. I use them, and I taught you guys about how to apply them. So, but I didn't mention them now because I know that when I look at the names, I can see that half of you guys are new here. So I don't want to complicate things. That's why I just used pure price action. I ignored my relative strength index. I ignored my volume, but I use it. We use it. The guys who are old here, they know how we apply it, everything to detect good entries. But even now, I was checking them, but I just couldn't alert you guys because there was nothing significant that they were showing. So if there was something significant which they were showing, I was going to just open your eyes and consider them. So thank you for joining, guys. Thank you for joining.